crypto is in the financial industry, and I major in finance, which I luckily I found out it's actually very relevant to the DeFi space. I kind of use a lot of the knowledge and analytical framework that I've learned in my work and also the study, and also it's also part of my interest. So I've been always a fan, working on finance stuff and looking into DeFi stuff, which is innovative, but also the common knowledge and analytical framework applied. And when I entered crypto space, I basically worked only for one project for almost 5 years, which is a POW based public chain called Conflux. Most of the team engineers is Asian or like Chinese, we say. Well, it's good. It's solid engineering, which improves Ethereum by 100 times while remains POW and decentralized. But the public chains needs a lot of capital to really push it up front to the audience and developers. So the capital doesn't favor projects from the east, especially on the infrastructure track. So if it's DeFi or applications on the user side, that's probably better. So so I worked on Conflux for about 5 years, but also due to my interest and majoring in finance, I also participate in DeFi space very actively. So I'm a active contributor to AladdinDAO, in which they gather people who are interested in finance and talk about like finance new projects. They also develop DeFi products, like core DeFi, underlying infrastructures. I think one of the core system they pick up is the curve convex system, which I think it's very reasonable given stable coins and homogeneous asset swapping is definitely one of the very important things in the DeFi pillars, right? So I think the right way to do it. So, and I've been basically doing educational, promotional, and also being part of like quality assurance as early product users to kind of give feedback to the team. So today, kind of my work to do the educational part work on one of the Aladdin's product, which is Clever. I've been talk about like Concentrator, which is another product that developed by AladdinDAO in Bankless. So this is probably the second time or third time. I can't remember exactly. I think probably the third time in Bankless to share DeFi stuff. Yeah, which is a pleasure and always a good thing. Yep. I think that's more or less it. Kind of stumble a little bit.
No, man, that was seamless because you ended exactly at where the screen is at where Kruger is sharing. So it's like you can launch right in. That felt like you synced it up. Nice. Thank you.
Okay. Yeah, thanks. We're good to go watch the screen. Is the screen ready? Kruger,
yeah, you can.
Ready?
Yeah, you can. Right. You should be able to see it.
Okay, cool. Well, like today we're going to talk about like Clever. So first, Clever, as DeFi's, they're Legos products, right? So Clever is built on top built on top of the curve and convex systems. So quick, short, like background information on curve and convex. So curve, basically you exchange stable coins, or let's see homogeneous underlying assets, let's say Ethereum or stake Ethereum issued by Lido, or like all kinds of ERC20 versions of Bitcoins on Ethereums. So those are the kind of the beginning point of curve, and then later on they have curve v2. Now you can swap like different assets, but they actually concentrate exchange rate on the curve to a very sweet curve, so that people can experience least impermanent loss, but that's kind of complicated. I won't go deeper on that. But starting from V2, they start to have like assets of different kinds that people can swap. So, and then like they incentivize people to provide liquidity, which means play the role of limited partner, providing pools in curve using curve tokens, and then the curve tokens, which if you lock it up, you again recurve to actually vote on how much curve tokens that each pool should get, right? But like once you locked your curve tokens, you lost the liquidity. And some people, especially for retailers, they don't have enough voting powers, and they only want to gain probably the value of curve token itself, and also obtaining that interest accrued to the V curve token. So that's how Convex coming out. Convex basically obtaining the governance rights of VCRV tokens, but also allow people to trade the liquidity part of the VCRV tokens. So that's like CVX-CRV coming out, and CVX-CRV, right, plus the CVX token. CVX token is the governance rights, monetization of governance rights of VCRV tokens, while CVX-CRV give you the liquidity part, right? So that's kind of a simple version we put on it. So for CVX tokens, they allow you to lock CVX tokens, which give you VL CVX tokens that allow you to vote on behalf of the VCRV tokens they control, to decide how much like curve tokens different pools could get, right? And then like for people, different type of projects coming out say, hey, you should vote for me, and in return for your votes, I will give you some of my tokens. So we call it bribery. So when people go to a website called Votium, maybe we can show the Votium website a little bit.
One sec.
Yeah. So like go to Votium, so people can vote. People can vote on Votium, and also to see how much they can be bribed or how much reward they can get, right? So this is a kind of the process. Yeah, this is Votium. So Votium is the place where you can see how much you can get for using VLCVX to vote, and like how much each project give to the voters. Well, it's kind of a game theory that people. It seems we don't have a voting dashboard, but every 2 weeks they should have a voting dashboard. Then you will be able to see different pools, how much they bribe, how much reward they are giving voters for your votes. So generally, the big guys will kind of game that to the very last minute of the voting ends. But for ordinary people, they just have to follow. Okay, which one is the highest returns rankings at this point of time, because that won't matter that much. And also, you can actually delegate your vote to the Votium itself. So the Votium will help you to vote. But either way, that give you problems. Like the problems will be, first way, if you vote to the highest returns, generally at that point of time, that's definitely not the optimal or the best choice you can get, because generally the best choice is allocation across different type of tokens, which is a combo or portfolio of bribery votes in the end. But that kind of help you to go the second way. But the second way will make you ends up in another situation, which is you will get a lot of tokens after each like vote. A lot of tokens, if you have to claim and then sell, that definitely incur a lot of transaction fees. On Ethereum, it's definitely expensive, especially in the bull market. Well, in bear market, that's better, right? So that give you a lot of other troubles. To also, you have to manage token price kind of fluctuate all the time. You have to kind of time the market to find a best spot to sell your tokens, so which is also very tricky. And the third point is like this happens every 2 weeks. So if you are people that you just want to collect you just want to collect the highest yield, right? But so much analysis, so much operations, and also at this very frequent process that's kind of very troublesome, right? Every 2 weeks you have to vote, you have to collect, and you have to sell. And let's say if I'm an ordinary investor, I only want to bet on my put my bet on Convex token itself. Let's say CVX token itself. Then I have to sell all those tokens every 2 weeks back to Convex itself. So this it's very troublesome, time consuming, and also not very cost effective, right? So that's, I guess, probably the very initial ideas, like Clever's coming out. So Clever is basically, then we can go back to Clever. I think there's a FAQ we can click up, see the kind of the diagrams that they show this process, right? All right, there we go. We can see the diagram, right? So basically, how Clever help you is you unlock your CVX via Clever, and Clever help you deposit the CVX at Convex instead of you going there, right? And then basically, you can think of Clever is a machine, right? Just do the machine that does everything that I said, but in the automatic process, and also in a kind of a grouping basis. It groups people's CVX and help people deposit that into Convex, and help people, right, to vote at the best returns and collect returns, and then sell those returns back to Convex itself and collect Convex tokens. So it basically maximizes CVX returns for people who invest in CVX token itself. So that's their the kind of the top philosophies. Right, you see here, like basically I think where you see the red top corner, VLCVX votes and collects bribes, and all those tokens, right? All those tokens sell back to Convex, right? And that's kind of explain the part that how Convex itself works, right? And then let's look at the left corner, left part, the left bottom part of this, like how they actually kind of come up with CLEV CVX tokens to represent your interest in this product. So basically, the VLCVX is the Clever system or Clever protocol hold for you. You don't hold VLCVX yourself. Instead, you're holding CLEV CVX, which is kind of I would rather call it a zero coupon bond or note that you can exchange that for CVX itself one-to-one in the end, not immediately. You have to get in the queue, or you can exchange in the secondary market. I'll explain that in seconds, right? You can claim your future yields up to 50% of your principal. So that's kind of a way you can think of it as either as a leverage or a way that you can cash out your future returns if there's a secondary market. If there isn't a secondary market for CLEV CVX that you can claim that your future use, the best way is you're put that into furnace, right? You see that furnace where you put your CLEV CVX in the furnace, you burn that immediately for CVX one-to-one, but you have to wait in queue as everybody else does, right? And then as the time you're waiting, the system is collecting CVX yields every 2 weeks from Convex systems and sell that back to Convex, right? Everybody have to wait. So, and then when you wait, you get the CVX, and then you can claim that CVX when you think there's enough amount for it to claim, right? So that's kind of the ordinary process work. But if you say, hey, when I get this zero coupon bound CLEV CVX, the normal process would be burn that at furnace and claim the CVX when times arrives, right? So that means your interest accrued and matured, you can claim them. But this zero coupon bond, generally you can think of the zero coupon bond, they should have a secondary market. And once the secondary market become liquid, you can trade out your zero coupon bond back to the underlying assets or CVX itself immediately. Then you can get those CVX in secondary market and theoretically that should be happen in curve system very quickly, and then you can deposit the CVX itself back into the system itself. So to increase the amount of CVX yourself. So that means you basically leverage up your convex principles without the risk of being liquidated, because basically you leverage CVX tokens itself and borrow a zero coupon note against it, which with the zero coupon note, its underlying is CVX itself, right? So there basically are no liquidity risks because there's no oracles here is involved, and without losing the position or the risk exposure itself at CVX itself. So that's kind of the good here. You have to make sure CVX secondary market exists. So I think the plan is they do the IDO, which just happened yesterday. I think they sold out in 5 minutes. They raised 100,000 CVX in exchange for 100,000 Clover tokens, right? And that they will use that tokens to boost that liquidity, the CREV CVX against CVX liquidity LP pool in curve pool. So once that happens, you have the secondary market. You can trade out or you can cash out the CREV CVX, which you can consider it as a zero coupon bond, back to CVX immediately and deposit that back into the Clover system. So that gives you how you leverage up, right? Okay, so I guess that's kind of a plain explanation of how the system works. And then we can go back to probably the practical, the Kruger here he works. Okay, we can look at the dashboard. Let's scroll down. Let's see how much he locked. Okay, lock. Okay, so it says currently he locked like 1,500 CVX, right? And then there on the right side, there he said there's 18 CREV CVX claimable and 730 outstanding debt. So that means, so how the system works, I explain details here. So that means basically he has borrowed 732 CREV CVX when he deposited that 105,000 CVX in the very beginning, right? So that's how much future note, the zero coupon note he can borrow. And once he borrowed, the system will gradually accrue his note that he's earning in the system to return his debt. Well, so as I would say, it's actually he borrowed 750. He doesn't borrow. He's not borrow. He didn't borrow like 732. He has 732 left to repay. So it's actually 105,000 deposited and 7,500, which is exactly the half he borrowed against the system, right? And as he's earning this zero coupon note, the system is helping him to paying down the debt automatically, but in a gradual process, right? So now he has only 732 debt outstanding, right? So that means if you want to unlock your 1,500 CVX, you have to pay that 732 CREV CVX right now, and then you can unlock. Or you can wait until this 732 outstanding debt to be fully paid out. And how's that gonna happen? So on the left top corner, you can see that APR says 31%. So that 31%, you can imagine as that 31%, that means your annual yield, you're paying 31% of your principals, right? Now you have almost close to 50% of the debt. So that means it takes about like more than a year and a half to pay down the debt in a full state, right? So once that debt is automatically paid back by the system, then you can unlock, or you can, to buy back the CREV CVX on curve. Once there is a secondary market, you buy back that and you pay back here, and all your debt is clear, and then you can unlock your principals. Okay, so that's how this like the leverage system works itself. But as the other option is, as he's paying down some debt, right? He paid down 18 debt, and then if he want to leverage to the maximum, which is 50% of the CVX token itself, he can borrow. He can claim like that 18 CLEV CVX to leverage up to the maximum. Well, I guess this is not very cost effective because 18 doesn't give you much stuff, but all this process costs you probably $2 to $3 even in this bear market, because each transaction probably costs you $1 at this point of time. So that's not very worthy to execute it right now. Okay, and then we can go to another page, the next page, the furnace page. We can go to the furnace page. Furnace page. All right. Okay. All right. Okay. We see here he has burned. So as I said, he borrowed 750 CLEV CVX, and I assume he burned all of it, and now he has only 726 CVX left and 1.4 CVX claimable. So to me, so my guess is he has already claimed some CVX out. Kruger can confirm that. Maybe have you claimed?
I needed a little bit yesterday morning.
Yeah. Okay. So Kruger just confirmed he has already, claimed some CVX out, because as I said, he borrowed 750 CLEV CVX against the system, and he burned all those CLEV CVX here in the furnace. So that means there's 750 CVX in the future to arrive. And now we can see there's only 726 left, which means there's 24, which is claimable, but there's only 1.4 claimable right now. So that means basically there's a 26.6 already being claimed by Kruger, which he has confirmed he claimed yesterday, right? So this is basically how the systems work in a whole, right? And we can see there's other information that says furnace pool info that says total CVX. It says 3,400 something, right? CVX for withdrawal is 0. CVX on pending is 3,000. That means there's 0 left for people to withdraw. If you want to request CVX, I guess. So that basically means the CVX is fully distributed to all the people who are able to claim CVX. So if there is a CVX for withdrawal, the people who coming in, they can claim some CVX immediately out of the system. But if there isn't left, that means everything has been distributed to the previous or existing, the people who burned the CLEV CVX in the system, right? Okay, so that's basically how the system works. Okay, let's go back. Let's go back to the main page. All right. I guess the pool hasn't launched yet. Charlene, can you confirm that the pool hasn't been built yet? Has it started yet, Charlene?
You mean Cliff CVX liquidity pool?
Yeah, CLEV CVX, the note against the underlying itself. Has it started yet?
That's coming.
That's coming. Okay, so that's what I'm trying to explain here. That means the secondary market itself hasn't happened yet, which is supposed to happen in a very short time on Curve, where you will be able to trade CLEV CVX against CVX itself, right? That actually give you a live and liquid market of the note, this 0 coupon note, against the underlying itself, right? So once that happens, that means you have two options. Instead of you have to burn all your 0 coupon note in the furnace, you can immediately trade out your the 0 coupon note back to the underlying itself. Either you can cash out or you can leverage up. When you leverage up, you trade it when you get the CVX itself, and then you come back here to lock the CVX into the system. And when you lock those CVX into the system, automatically you have more CLEV CVX you can claim, right? And then you can claim all those CLEV CVX, and then you kind of burn that in furnace, or you can trade in the Curve system again, and then you kind of leverage up more, right? So that means basically every time you loop this process, you can leverage up 50%. But the amount you can borrow out against the system is decreased at a 50% rate, right? So if you use a mathematical equation, so that's basically give you a sum up of a number series decrease at 1/2. That almost equals 2 if you give you a limit of that. But I guess that essentially it won't be cost effective to loop this forever, right? Given it actually depends on how much CVX you started first, right? We don't need. I guess generally, if it's me, I probably will loop it once or twice. I feel it's quite enough. Okay. Yeah. So that's kind of the very basic like product level introduction of Clever itself, and then I will actually deep a little bit digger into the theory, the finance part, and the math part of the product. But before that, I wanna give 5 minutes for friends to interact. So people have questions or like discussions we can have. We can do that. Or if there aren't, I'll continue to discuss the financial and the mathematical indication of this product. Any friends would like to come up to kind of talk about questions, or even Kruger, if you have any thoughts or feedbacks using the product itself, I'll be happy to have a discussion. To me, I'm actually a user as well, but I mean, when the product is actually just launched, I use it, I guess, in the very early days, and also give some product feedback to the product team. I think they kind of like it and actually revise it to the way we discussed. So we actually will be a very good way of helping the Aladdin team to continually to improve on the product. And any feedback or any questions?
I think there's one thing I would kind of comment on as you were talking about the way that the whole system works. There's an extra. So as you mentioned, we raised this CVX yesterday, and the purpose of that is to seed the Clev CVX and CVX curve pool, right? And as you say, that's coming very soon, and that's for swapping in. But 100K CVX is a limited amount of liquidity compared to what's needed for all of the Clev CVX that's pending in the furnace. So I think it's important to highlight that there's actually going to be really, I think, quite good farming opportunities with that Clev CVX. Because once we launch that curve pool, it's going to be like liquidity mining emissions of Clev start at that same time. So there will be Clev will be farmable in that curve pool and possibly one other pool where you'll be able to take your Clev CVX that's sitting in the furnace just kind of doing nothing and waiting, and move it over and actively farm it in that curve pool. Well, and of course, the reason that we do that is so that we can increase the depth of that curve pool so that the liquidity swappers are quickly able to have the depth of liquidity they need to make the swap.
Right. Yep. That's a very good thought put out there. It's meaning, as I said, if once that secondary market happens, right, and there will be a liquidity for the zero coupon note or bond to be traded out or cash out. And people doing that is there's reasons, right? The very obvious and intuitive reasons would be Clever itself would use their own tokens to do the farmings, but I don't see the emission schedule for that pool yet. Do you have the information for that?
I think Charlene is working out the details right now on exactly what it's going to look like.
Okay, so that details hasn't been released yet, right?
Liquidity pool is coming very soon. As Kruger said, we raised that capital yesterday. Actually, raised that in 4 minutes, and the liquidity pool should be launched in a week or so, and then Clever will be fully
functional. The farming schedule along with the emission numbers, is that out yet?
You mean liquidity mining? on the
Yeah, the incentive for the liquidity mining part, is that out yet? I don't see the details though.
that will be all launched together. So people bought into the token yesterday, right? And they will be able to claim the Cliff token, and also the liquidity pool for Cliff pool 2, and also Cliff CVX, the CVX liquidity pool will all be launched together.
Yeah, and
Okay,
forgive, and I
okay.
think to answer your question, the overall emission schedule for liquidity mining Clev has been defined. That's in the it's in the distribution schedule to launch. So it's something like 48% of the fully diluted value. And in the first year, Charlene, I think 5. Is that correct? Liquidity mining emissions?
Yes.
Yeah, so
Okay.
essentially we know the total Clev emissions for liquidity mining for the first year, and I think the only knobs that we're still adjusting right now is exactly how that is divvied up between the different pools that need incentives, and that's coming. Like I say, that's coming very soon. Once given that we just raised the seed capital for that pool yesterday, we have kind of everything we need now. So to look for that.
All right.
Imminently.
Cool. So I guess the big numbers we already have, but not divided among the the other pools, maybe the Frax pool that's coming soon, right? Like how much we're gonna divide among those tools about the Clever tokens incentives to maintain those.
Well, initially we don't incentivize. We probably, and I don't want to speak out of turn here, Charlene, so interrupt me if I'm wrong, but initially the partnership that we made with Frax will have them actually providing incentives in the Clev USD liquidity pool, which hopefully will. I think that's designed to be sufficient to bootstrap the pool for those first 3 months. So at least while we're in that like early partnership phase, there'll be more emissions to direct to the CVX product.
Okay.
So probably the farming, I'm guessing, and I haven't seen the final numbers yet. I'm guessing the farming will be very attractive, and then that'll basically smooth out the transition as all the Clev CVX in the furnace is looking to, presumably all the Clev CVX in the furnace is looking to lever up. But there won't be such a rush if there's really like lucrative farming opportunities before the liquidity is deep enough. Yep.
So the intuitive answer for the coming farming opportunity of CLEV CVX against CVX itself, it will be very lucrative in the early days, especially when the liquidity pool is not that sizable, right? So that actually give you an opportunity to do it. Okay. Any other comments? I think this is a kind of a fortune code. Yeah, people can kind of. I will talk about a little bit of that later on, the financial and the mathematical indications about it. Any other comments? All right.
No,
okay.
I would just say, just to comment on the numbers here. The reason they don't quite add up to what you expected in the furnace is because I yesterday when I was pulling CVX out to use in the Clev sale, I'd had a deposit from quite a while ago, and so I had already done a claim site, like I had re-upped my position, so I had deposited the 1,500 some time ago, and I had quite a bit of Clev CVX that was able to be claimed, and so I kind of claimed that all at once a couple of days ago. And so there's like a very sort of a small number of claimable CVX here, and that corresponds to not a bribe round, but like CVX has a small like farming yield when VL CVX pays like 2%, I think, in CVX, and so that, as well as the bribes, gets harvested and deposited. So that's why you see this kind of strange small number of claimable CVX. It was 0 just before the offering yesterday, but there's obviously been a harvest in the meantime.
Got it. So that means there's a harvest transaction happened in the protocol and distributed to the people who has burned CLEV CVX before, right?
Exactly right, and it was a really small harvest because it was just the 2% yield, not the actual full bribe harvest.
Yeah. So it's from the convex system. It's not from the bribery part. So that's why
Right.
it's a small thing. Yeah.
Exactly right. And so if you add the 726 to the 1.4, you get back to the 728 that you oh, actually no, there's another discrepancy that I'm not off the top of my head, I can't answer right now. But anyway, the reason why the numbers don't quite add up is because it wasn't just a simple like single deposit cycle. I had re-upped the position as of a few days ago.
Yeah, it's not exactly the same. So like 732 is actually a kind of the debt that's left, right? It's actually
That's
a
right.
number coming out of minus 18. So it's actually two different series of numbers. It doesn't add up here. It shouldn't.
Well, the 732 and the 18 adds up to half of the locked amount, right?
Yes, that's always equals as long as you don't increase the principles, like how much CVX you deposit here. That's always 50% that you can borrow out, right?
Exactly.
And the other part is actually it really depends on right how frequent and how much you kind of burn your furnace and how much you claim, right? If you don't claim and you continue to burn, right, there will be more CVX accumulated in the system. It can be definitely more than like 750. It can actually be like more than 1,500 if you don't claim your CVX out, let's say for 3 years, for 5 years, right? That definitely will exceed the principle itself.
Exactly, and
they shouldn't add up. There are two series of numbers.
And it's nice because depending on how much you have in the system, you can choose how often you want to like claim the CVX. So I would go in and I made my deposit and then claimed the maximum and put it in the furnace. And then I just left it for many bribe rounds. Like in theory, after every harvest, I could go back in, claim again, and like do the cycle. In order to earn the maximum, like I would get the maximum possible share of CVX in the furnace if I did that. But for the amount that's here, it's not really worth it. So I let several bribe rounds go before I go back in and change the position. But depending on how much you have in, you can do it every single time or just forget it for as long as you like.
That's right. Yeah, it really depends on like if you go to the very the first principles, it really matters on if you do this, does that increase more gains than the cost of your transaction fee, right? If that numbers works out, you should do it, right? But generally we would do it on a very large in numbers, right? But so if you do have a very big number of CVX lock here, basically that means every 2 weeks you should do it, right? Because the transaction cost is almost minimal, right? But
especially if you have a long-term view on CVX, right?
That's right. Right. Let's say if you have a smaller number, right? Even that also exceed the transaction cost, but that doesn't earn you like a few dollars every year, then maybe forget it. Right, save it for longer terms. Right, yeah, and yeah, that's kind of another loop you can do, right? But that actually is more attention driven. Yeah, every 2 weeks you come back here. It's actually more troublesome than like you can loop the leverage, because when looping the leverage, you basically do it immediately, right? When there's a liquid market. Okay, all right. So that's kind of the 101 of the product itself. If there's no questions, I'm going to the financial and mathematical indication of this product itself and why kind of Aladdin built this product and how I look at it. Okay, so when I look at this product, that basically means it leverage on an underlying asset which will generate yields. So people leverage on the underlying assets or financial assets in which it generates yield, we can actually build a zero coupon note market for it. And this zero coupon note, it's actually a new financial product that we build. We think of it as a derivative of the original underlying stuff. As long as it generates yield, we can build a derivative for it. And CLEV CVX is a derivative of CVX itself. And the reason we can actually build CLEV CVX for CVX is because CVX itself is getting yield based on the curve and the convex systems. And because they have yield, when you borrowed against this zero coupon note, even if you don't repay it, gradually the system will help you to repay because you're collecting the underlying assets is collecting yield. If you don't repay the note itself will be repaid down by the yield, when time lapses, right? So this is the beauty part of the product designs, right? It is basically, it can create a zero coupon note market for every underlying assets which generates yields through DeFi farmings, or like generate yield for not even DeFi farming. Let's say if it's a staking system, right? It provides yield over the long term. It can generate a note market for it as well. So probably the biggest note market in Ethereum market is the Lido ST ETH, right? State ETH is a kind of a note market, but it's not a zero coupon note, right? Because when ETH actually returns, it returns not the ETH itself, but also return the interest. Well, like the design of CVX, the Clover itself is actually a zero coupon note, right? Because it's always a one-to-one. When the CVX is matured when CVX is claimable, one CLEV CVX is exchanged for one CVX. So that means it's a zero coupon note. But you don't get it immediately. You have to wait in the queue when the yield arrives, if you burn in furnace, right? So comparing to traded cash out on secondary markets, one way is burn that in furnace and compare that to trading out on secondary markets, which you get liquidity back to the underlying itself immediately. That means you theoretically or mathematically you would have a discount factor there, right? It's not always valued at par. If it's valued at par, right, and you don't have to wait, then that's an arbitrage opportunity, because in furnace system you gotta wait. You gotta burn and wait when CVX is fully claimable, the yield is fully arrived, right? And then you can claim those CVX immediately, right? But if not, you trade it out. But if you trade it out 1-to-1, if you trade it at par, that theoretically that shouldn't happen, right? But where's the incentives? Where's the incentives that Clover itself is putting out there in the beginning, and also when the liquidity itself is not that big? Yes, people, it's definitely it could be traded very close to par, the CLEV CVX. Well, what should be that come at the mathematical part of this this editorial talk is that what should be a theoretical price for this zero coupon note, not just CLEV CVX, but also all the the note markets that Clover would build in the future. Right? It should have a theoretical a fair price for this note. Right? I personally I do some mathematical equations myself, but I don't hold it 100% right. So, but I would make it an open question for people to discuss, and I would love to talk with people in private first to kind of to come up with the theoretical the price equilibrium in the first, and then we can talk it on further on Twitter. And back to the scalability of Clover product itself. As I said, it can build a zero coupon note markets for almost every yield generating underlying assets. So CVX is the first one. Even CVX actually has engaged a very complicated process every 2 weeks, but it saves the troubles for retail users to automatically collect the yields, and they kind of and then they do this zero coupon note markets for convex, but you can do more asset categories. So the next one is coming up, as we all seen on the Twitter's announcements, is the Frax collaboration, right? So Frax, everyone knows Frax is probably the smartest stablecoins on the markets that is looking out for yield and also generating yield in every DeFi scenarios as much as possible, because as long as they can create scenarios for Frax farming, they can increase or boost the circulation of Frax stablecoins. right? Because they're e-commerce, they're not as early as DAI, but they don't want to go as risky as UST. So they try to extend the circulation in a safe way, which is generating DeFi farming in a reasonable framework, right? So I guess people see a lot of Frax farming choices in Curve, and Frax is actually trying to build a Frax USDC pool as a base pool for the future stablecoin pools. So that's how like Frax play out their strategies to create scenarios for Frax. And another way to increase circulation, the first option is to go to build more scenarios, DeFi farming scenarios, right? For Frax. So that's why people get interested in Frax and boost the circulation. And the second way is leverage up, right? So the same number of farming scenarios for Frax help people to leverage up. So there's a product called DGenBox to help meme to leverage up to build a meme pool on Curve and allow people to leverage to the most to increase the circulation of meme, right? So Frax, that's definitely there's the system could exist for Frax as well, but definitely if the kind of the leverage product is built in by Frax, that may not be a fair way, because the risk control may becoming loose, just as what UST has done, and which brought them doom in the end, right? So Clever itself coming in as a very independent third party would like to provide this leverage tool, but in a way of a kind of a zero coupon note way to help like Frax LP, limited partner, like the liquidity providers to kind of leverage up and do exactly the same way that what Convex, like CVX tokens has done for itself, right? So basically you are trying to collect as more Frax stable coins, or put it more precisely would be the LP itself, the Frax related LP itself, to collect as the most return as that Frax related LPs in the future. But also Clever will allow you to borrow against the system, which will be a zero coupon note of that LP or Frax itself, right? And then allow you to leverage up. You either burn that in the furnace, or you can cash out in secondary markets, right? And Frax has already promised they will, right, use their CLCVX, which is the voting powers the Convex system, to give curve boost that LEV USD, which is the name of the zero coupon note for the Frax related note, to boost that pool, to help people to leverage up. So that's a coming collaboration after the CVX pool is built. Okay, so that actually can, which I see it as a very big thing that's coming to boost the TVLs to a very big numbers for Clever, because as you know, like CVX token itself is not a CVX itself, firstly, it is a risky token, right? And itself, its market cap is definitely nowhere compared to stablecoins, right? Stablecoins is easily scaled, right? So with this Frax collaboration coming in, my expectation is this will increase the TVL like in the range of $50 million to $100 million somewhere, and far more than what we have at the current system. Here you only have like probably only around $5 million, because it's only CVX as a loan, right? But other than Frax, right, there's a lot of tokens that are generating yields in the markets, and all those yield generating tokens, they may need a note market for them, right? To help them to leverage up. This leverage up either for stable coins is actually increase the circulation, but if you think about for the non-stable coins tokens for CVX itself, it's actually lock up. It's locking the token itself, so it actually decreases the flows in market, which optimize right? And so it helps people to build confidence and build long-term investment habits, basically accrue back to the underlying tokens all the time. So help people to build faith, build confidence, and accrues the principles of the underlying tokens in a very long horizon, which will be very welcomed by the DeFi protocols, in the coming collaboration. So if let's say Frax bring in another 50 million to 100 million TVLs, other yield generating tokens, I believe they will, there will be more collaborations coming out, and each this yield generating tokens will bring in more values to the protocols, because the protocols basically collecting fees, generating fees in this process, and these fees are distributed back to Clever token itself. So that's how I see Clever has built. It built a zero coupon node markets for all these tokens, and then collecting fees in the process of building out this market. And as the DeFi tokens, there are more and more yield generating DeFi tokens coming out, they can build more and more of this market. It's just like to take US dollar as example, right? US dollars is probably the world's most largely used currencies, and T-bills and treasury markets, right? T-bills, T-bonds, right, and zero coupon bonds, they are probably the largest liquid bond market or note market in the financial markets, right? So that's what I see Clever is bringing in the systems, right? This note market, I believe it's like commercial paper, bound or note that we've seen in the traditional financial world, and Clever is actually have that happening in this world. It creates a liquid market for such notes, but also create a leverage market for such underlying tokens, right? And this is actually a blank spot I've seen in DeFi space. I haven't seen such markets. And the most important thing is it helps the protocols to build long-term believers, right? For Frax, it helps people to accumulate more Frax, which increase the Frax circulation. In the end, for CVX, it helps people to hold CVX and accumulate more CVX in the process, right? It help people, convert investor into long-term investors, right? Because those CVX are locked. Otherwise, you have to buy back the notes in the market and repay it and unlock the underlying tokens, right? But generally, as this process is going on, you become a long-term holder of the CVX token itself. So that's the beauty part, right? When you create this leverage or note market itself, it helps the protocol or project itself. So that's why I see it's actually doing, both contributional things to the project, but also to the retail investors, right? Save them troubles, save them fees, but also help them to accumulate the tokens that they have confidence in, right? So this is how these products are kind of a beneficial thing to both protocols and projects, and also, save you process, save you fees. It essentially becomes kind of a little bit sophisticated tools for people to manage their DeFi assets, right? For people who want a little bit more leverage, right, in this world, right? So the retail users can use this tool. But in the meantime, it creates a node market for sophisticated institutional investors. They will be able to see, okay, where this node is traded, whether it's fair priced or it's overpriced or it's underpriced, right? And this becoming a trading opportunity, a mature and a liquid opportunity in markets. A big node market is created, and people will be able to trade on it, right? So this actually reflects, and the yield itself, the discount factor itself reflects actually the risk that people are undertaking, right? Because, like, to give you an example to understand this risk, right? So CVX, I guess in the bull markets, when Clever first started, you can see the APRs is actually right more than 40%, right? The APR itself is dropping to 31% now, right? That means actually the rate, the yield itself is generating is actually becoming lower, right? And also CVX token itself, the price decreased, right? And when this risk itself is changed, that is basically you can assume the reading is downgraded, right? and that downgraded rating will be reflected in this node market, right? And this discount factor will be becoming bigger, and the node probably will be traded at an even lower levels compared to trading closer to par, right? So this actually will reflect as risk systems and allow people to tell, those discount factors reflect the risk levels of different type of assets, right? So this will be a very interesting thing if you think of it becoming a deeper and larger market as things evolves, right? But now it's too small, right? If the first, the secondary market for the zero coupon node even doesn't exist, well, it's coming soon, right? Once it's coming, and second one will be a stablecoin node, and it happens too, right? And then there will be more, right? So I'm actually very excited to see these DeFi products to unfold itself into more asset tokens and more categories, stable coins, non-stable coins, right? Ethers, maybe Bitcoin itself, right? Although there's not many, yield farming or yield generating scenarios for Bitcoin, but if there are, right? There will be a cool things for Bitcoin, holders to come and farm at this place and leverage up, right? And it's also a very safe leverage, right? Because as I said, it's, you are borrow against the system a note, a zero coupon note, with the underlying itself is the principal, right? And that is guaranteed to pay because it generates yields, right? Well, if it doesn't, the yield, of course, as I said, the yield could, become lower as the market when goes bearish, right? But that will be reflected in the discounted factors, right? That takes longer time because that means it takes longer time to pay out the things you catch out from the systems, right? But that will reflect in the price, right? So this is becoming very interesting and dynamic, and also a very dynamic gaming part of the system itself, and also a lot of participants in the secondary markets to trade based on their will, and given their trading activities, it also generates more yield for people who believe in it and they just want to hold it and leverage up and burn that in the furnace. So this is a cool product, I think, and it also generated tools and trading markets, and even more asset categories can come into this place. So that's my understanding of this product. Zero coupon node market is coming out of this product, and more more tokens and more asset categories can be added to this systems, right? So yeah, and also I believe there's actually a mathematical mathematical equations to find the fair price for this, right? But that's only a snapshot of that fair price. And if people's will start to change and differentiate from each other, right? Because some people will say, "Hey, actually, I'm more, optimistic," and some other people may be pessimistic. And that equation is only a theoretical price. It doesn't reflect the true price of that because people's will are different. So people have different will against it. So the node itself will actually will trade at different place, and then you may have a yield curve, right? A yield curve of the zero node, because this zero node coupon, if you think of it in the traditional financial markets, generally a zero coupon bond, it has a maturity date, but here you don't have it. You don't have a maturity date, right? The maturity date is basically you basically all your debts are paid down, but how long it's gonna take for your debt to be fully paid down? It really depends on how much you can leverage out. Let's say for Convex, it's actually 50% you can borrow out, and also the other factors it depends on is how much yield CVX itself can generate, but that varies, right? So the first parameter itself is actually a parameter that the Clever system sets, right? It decides which parameter is the right parameter. Maybe as more people, more thinkers coming in, they become part of active contributors to the Clever system. They can vote, or people can delegate votes to these people, and they can talk about the parameters, which is the right parameter to set. And the other parameter, which is actually external factors, is the convex tokens itself, how much yield is generating throughout the paper, and that is actually changing all the time, right? So this big two factors, there's also other factors, but these two main driving factors will actually decide how long this zero coupon bond will be fully matured, right? And it's actually not a fixed time. It's not a certain date that you will expect this zero coupon bond to be fully matured, right? So that's actually a very interesting. It's a very interesting thing to see this new product coming out of the DeFi systems, right? In traditional financial market, you only see the zero coupon bond with a fixed date. You know when it's gonna fully mature, right? So this yield curve theory may not fully apply here, but yeah, we have expected date of this be fully repaid, right? And we can build a expected yield curve based on this this market. But this could be a brand new financial series that coming out of DeFi systems, and actually Clever is exploring this new frontier, which I'm more excited as a financial student. Can't say I'm myself an expert, but that's my I'm trying to making such product into a series, and people can think of it in a series and mathematical way of it as this goes on, right? So yeah, so that would be my 2 cents of my thinking of where this product can goes, and goes into more asset tokens, and how this can actually inspire new discussions of the snow market, where it should be traded and how it's created, right? And in the beginning, I believe definitely the farming itself will be the main incentives that people participate. But as time goes on, you will see smart traders will try to trade around the price of this CLEV CVX against CVX, and also the CLEV USD against Rex, right? And this gaming equilibrium will be very interesting to observe. Okay, that's all I'm gonna say. Any questions for the second part, the financial and mathematical indications for this product?
Forgiven. This is I'd love to get your thoughts on how you would look at a pricing model for the secondary markets for the Clev tokens. So definitely, I'll ping you or something. I'd love to get your thoughts on that.
Yeah, I'd be more excited. I mean, I'm not a math majors. I do have some of my series, but I definitely need help. People from more professional fields to talk about it. I even think we can maybe have some academic studies out of this, which is very interesting. I'm more excited to see all of things coming out of this product, which is a brand new things I've never seen in the traditional markets. But I think some of as I said, some analytical framework could be applied here.
Yeah. Well, I'm not a math person either. We'll get Kruger to tear apart the model. So the second thing though that I wanted to ask, that I guess that wasn't a question, but I do have a question for you, which is what we have right now. 3 collateral tokens lined up with Clever, right? Convex, Clev CVX, we have Clev Frax, and then we have Clev Curve. What do you think would be kind of in your mind, your thoughts on the next, what would be the 4th one that you would look to add?
Oh yeah. As I said, if I my way of choosing underlying assets would be, firstly, it has to be a yield generating token itself, right? That means there is DeFi farming scenarios, or not DeFi. Let's say there is farming scenarios, because staking can be one of the options. There is farming scenarios for this. That's kind of a must, a necessity in the first place, right? So this is the first criteria, and second criteria would be its size should be big, right? That means it has a depth big enough that, because there's a depth big enough, that means a lot of people can participate, right? And as more people participate, the market will find its equilibrium in a shorter place, right? and also it actually helps the TVLs for the Clever system itself, and also helps the fees that the protocol is generating, which will benefit the Clever token holders, right? So my intuitive thoughts is to, other than DeFi tokens and stablecoins, right? Those are definitely two yield generating tokens source we look at. Other things could be, like I would say ETH itself, right? ETH itself may be a very big, a big node market that we can explore, because when people stake ETH for US ETH POS, it generates yields, right? And the yield is quite stable, right? And why shouldn't we allow people to kind of leverage that up, right? But the problem is people already create a very big secondary market for stake ETH against itself. Can we compete on that? Or who will like to collaborate with us to compete against Lido stake ETH against ETH? That would be an interesting question, right? But I think this actually would be a good things to build, because there will be competitors against Lido, and I think Vitalik doesn't like the ideas of Lido being the largest, right? The players of the POS systems. And also because the financialization of STETH itself, it becomes the most liquid market in the East node markets, and more people will come in for this market. And that actually will, harm the decentralization ideology of the POS system itself. So I guess the motives, and both in a decentralized, idealism we are purchasing, but also from the financial incentives that the second players or third players want to compete against Lido, we can find ideal partners, right, for the ETH POS staking, and allow them to build these node markets along with AladdinDAO, right, to kind of push this out. Right, and with Clever, not AladdinDAO, with Clever to push this out. So I think that ETH could be a very good, underlying candidate for this to happen on Clever. So that's definitely one thing. And another thing I could think of is definitely Bitcoin, because Bitcoin is definitely a very big, mainstream cryptos. But the problem is there aren't many DeFi or BTC staking or farming scenarios exist in the market itself. So that could be very trouble, a big trouble for us to work on. But if there's one, either we create one, we work with other people. I think Badger DAO, they coming up with some like Citadel DAO or something. They're trying to create farming scenarios for Bitcoins, as they make Bitcoins as another major pillars of those LP pools in either Curve or Uniswap. That will create more farming scenarios for Bitcoin. But not many people actually utilize Bitcoins in this LP pools. But if there are more and more people using Bitcoins instead of ETH to incentivize their LP pools, this will the BTC farming scenarios will coming out, and that will be a very cool candidate as well. Right. Other things would be the interesting new DeFi protocols coming out, which having very good yield returns on itself, and its market cap is ranking in probably like, let's say, first 100. Ones I can think of, maybe some of those tokens are the ones happening, let's see, recently on Arbitrum, GMX, or maybe Dopix. Those tokens are generating yield as well. But if they are not on Ethereum mainnet, the integration part work could be troublesome. So that's also a problem for integration. So that's my 2 cents. But this is coming out of nowhere, so I cannot give you a precise answer.
Yeah, no, that's great. Just wanted to get your thoughts on that.
Yeah, but I think ETH is definitely a good thing to explore, because ETH and East Node market is very big, and Lido stickies almost create a monopoly in the markets. Like Rocket Pool or SSOV. They're too weak to kind of play a financial game or arm to against it. That actually makes decentralization a word, not a good choice, or not a good setup there.
For sure.
Okay. Thanks for giving for the presentation and all the insights shared. Unfortunately, I didn't hear a big part of this because of audio issue. So I have to catch up on the replay video later. So we have way past the hour. And if there's no further question, let's end the meeting here today.
Yep. All right. Oh, by the way, I'll type in my Twitter handle over here so people can reach out to me. Where I can put my text.
There's a message chat box.
All right. Okay. Workshop. Let me. Oops. It's in the Bankless, right? In the Bankless voice channel.
Yeah, go to if you see the workshop voice channel,
workshop.
there's a little
open chat.
Open chat. Yeah, you got it.
Open chat. Got it. So here we go. So this is my. This is my Twitter handle. Also, it's my Telegram contact. Feel free to pin in. I'd be happy to discuss, the mathematical part of this product, which will be very interesting, brain teasers. Okay. All right. Thanks, guys. Thanks for listening.
Awesome.
And have a good one.
Thanks for giving
Be happy to
really great. Thanks.
Thanks. Bye.
Thank you. Okay. Bye.
Bye-bye.